This video is for section 3-2. You will need page 39 in your workbook, which is a continuation from the 3-1. And the instructions for this are on page 69. So we're just going to continue journalizing right where we left off as well. So our first transaction is on April 5th. We bought supplies on account from Supply Mart, $600, memorandum 1. So let's put in our date, which is April 5th, and let's put in our document number, which is M1, and M stands for memorandum. So for this one here, we bought supplies on account, and I have a little note for this here. So our two accounts would be supplies and then our accounts payable. Supplies would be increasing here with our debit, and then the amount that we owe our accounts payable is also increasing, but it's a liability, so it's increasing with a credit. So we have two accounts here, supplies and accounts payable, that we will be using. Neither of these have special amount columns, so because of that, we will need to write two accounts down for accounts title. They will each get their own line, so I will write supplies first on the first line, and then on the next line is where you will write accounts payable. And I'm just abbreviating accounts payable, and this here is for Supply Mart. So two accounts we have to write down for our account title. We're not using sales, we're not using cash, so I'm just going to ignore that for right now. So supplies is increasing, it needs a debit, so I will record the debit on the same line as supplies for $600. Accounts payable is increasing and it needs a credit, so I will record the 600 credit on the line for accounts payable. Notice I do not write the 5 again down for the date. We write the day of the month, like the 5th for this example. We only write it once on the first line of each transaction. And you'll see if I had my next transaction as on the 7th, if it was on the 5th, I would write the 5 again then. That just indicates a new transaction is on that line. So that is how we will do that transaction when we have to write two account titles down. Our next one, on April 7th, we paid cash for insurance for $500. So let me go ahead and put in my date, which was the 7th, and this was C2 for check 2. Notice how they go in order, C1 and then C2. If I had C1 for check 1 and then I had C5 next, I would have missed a few checks and I would need to fix that. So paying cash for insurance, we'll have two accounts for that. We have prepaid insurance and cash. These are both assets. Prepaid insurance is increasing with a debit, and cash is decreasing with a credit. We have a debit, we have a credit. Life is good, and this is on the left side of the accounting equation, so it will still be in balance. Now, I won't need to write cash down because I have a special amount column for cash. I do, however, have to write down prepaid insurance. And what you should have learned from the last chapter is to make sure you write prepaid insurance, not just insurance. So prepaid insurance needs a debit, and this was for $500. And cash needs a credit since we're paying cash, $500. So you can see we have a couple blank lines there for cash. That's just because we didn't use it for those transactions. And we have one more. On April 9th, we paid cash on account to Supply Mart for $300. That's check 3. So let's put in our date, which is 9, and C3 for check 3. Now this time we are paying on account. So let's look earlier. When we bought supplies on account, accounts payable increased with a credit. Now that we are paying them on account, the amount that we owe Supply Mart is decreasing. So we need to give accounts payable a debit to decrease their account. Cash is also getting paid, so cash is going to then decrease with a credit. So when we bought on account, accounts payable got a credit. Now that we're paying on account, accounts payable is going to get a debit. And you do not need to draw these T accounts. I'm simply just doing it since that's how we learned it last chapter. So cash is going to be in our special amount column for cash. So we just need to write accounts payable dash supply mart. So these transactions are not new. We're just recording them in our journal now instead. And we're paying $300. That would be a general debit for accounts payable, supply mart, and then cash credit for $300. Remember, with every single transaction, we need a debit and we need a credit. They have to equal. Okay, so save this for the next lesson. I am now going to go over the on your own next, which is on page 41 in the workbook, and we're still on page 69 in the textbook. We're just going to continue from where we left off. So the first transaction is June 5th. We paid cash for insurance, $300. This is check 2. So I'm going to put in 5 for the date and C2 for the check. Paying cash for insurance is going to affect cash and prepaid insurance. We don't need to write cash because we have a special amount column for cash. The account title we do need to write down is prepaid insurance. Both cash and prepaid insurance are assets. They're increased with debits and decreased with credits. Prepaid insurance is increasing. The amount of coverage we now have is increased. So prepaid insurance will receive a debit for $300. And we're paying cash, so our cash is decreasing with a credit for $300. On June 9th, we bought supplies on account from Bayside Supplies, $700. That's memorandum 1. So let's put in our date, which is 9. Put in the document number, which is M1. Buying supplies on account will affect the two transactions, supplies and accounts payable. So I will list supplies first. And then my next one I need to write is accounts payable. We are not using the cash column because it did not affect cash. Doesn't matter to me if you write out accounts payable or abbreviate like I have before. Sometimes I just get in the habit of writing and it just all comes out. Okay, supplies is an asset. Assets are increased with debits. Since we bought supplies, supplies has increased. So supplies will receive a debit of $700. Accounts payable is a liability which increases with credit. We now owe Bayside Supply more since we bought on account. So accounts payable, Bayside Supplies will increase with a credit of $700. Remember, they always have to equal your debits and credits. On June 10th, the next one, we paid cash on account to Bayside Supplies, $400. That's check 3. So paying cash, cash will be affected, and it's on account to Bayside Supplies. So our account title we need to write down is going to be for accounts payable, Bayside Supplies. So we're paying cash. So cash is decreasing, so cash will receive a credit for $400. And then the amount that we owe our accounts payable is decreasing, so they will receive a debit for $400. Make sure you're checking, like each line you go down after each transaction, you have your debits and your credits and they match. And also that you are once again writing neat, so when you add up at the bottom you can get the correct numbers. Make sure you save this to complete the next 2 lessons on your own and then work together as well.